Hello and welcome, and it is about 10 p.m. Eastern Time, the 17th day of March. My name is Derek at the time of the recording. It's also crypto day, but it's not Nasdaq day. The market's been closed all day and at 7,482. And this video, I want to go over comparisons within the Nasdaq, quote-unquote, bubble, and how it's compared, how people are comparing it to that of Bitcoin. Oh, Bitcoin is just like the Nasdaq, it's going to crash. Now, would this be a bubble here? When the market fell so huge, down from 7,500 to 66 change. Well, it's now back to its previous all-time highs, so I really can't call that a crash. If it is a short-term crash, okay, so be it. But I always thought bubbles was a good term to reference major key tops that you're just never going to see again, because the ultimate price component was majorly overvalued and was ready for a serious crash to levels it would never see again. That's how I always presume that of a bubble. This is a spot where I'm going to show a lot of data. Even the monthly time frame, I need to do more. So I'm going to do a 25, the 50-day chart, I think I did. When I did this before, when I said I did. Because I've already, of course, planned out my video. 50-day time frame. There we have it. You know what I even want to do? Too many candles. There we have it. 65-day chart on that of Nasdaq. Look at this run higher. From 51 up to 5,000. A 100x gain. Wow, okay. And then it has, I call this, and I'm going to do the mathematics on this now. We have a low in at, well, I just seen the 50 number. 54.9. And a high in at 51.32.5, it looks like. That would be it. A half-fast correction would be 76.4, that to 17.59. Okay, so it had such with decent pierces below. If it was going to have a standard one, I'd wanted to see it correct 38.2% down, which is 61.8% up, calculated within this measure, 907. I guess in between there, but it never did come down to that point. However, that is the first thing I want to go over. Second thing is pattern. Okay. So we have, or had rather, a very nice move, that 100x gain that I'm talking about, in which it had very little correctionary moves. Every single time that the 18 average was in test, it was successful. It may have had moments where it went sideways, or if it had some small amount of price going below it, but it never could hold and stay below that point. So people call this a crash, and to me, I call this a correction. The big mistake I think that a lot of traders do for major volatile moves is they use linear charts, which look like this. So I guess you'd be like, oh, this is crashing. I got advice for you. Push the LOG button. Looks a lot different now, doesn't it? This one successfully was correcting. Because if you got out here thinking it was going to crash when it was at 1,400, near, didn't work. So after this retracement correctionary move, which on like a 100-day time frame would have found support on the 18 average in here, and Let's put a 99-day chart in, just see what it looks like. In this spot, okay, band flattened out, got below it, established, didn't change anything on any major levels. I had 65 before 60. It's all about the same. But the key point, market moves down, has its first rally, its first move since its most noticeable correction it's ever had. And the psychology that some people have, you have one, and this is just that failed lower high rally. It's no good. And you also have situation for people whom may now be selling because they were buying down at these lower periods. They maybe bought at 2200 and or even wherever, anywhere up in here. There's a lot of reasons where people on panic mode situations would do such. So overall, the market after this move had a decent leg, had its lower high rally. You can call this a washout, the last bit of scaring, and then a magnificent move. If you're curious to an upside target, which I accidentally would have deleted, so let me just recalculate that. 5132 is the low, I remember that. 1108, or high rather, 1108 I see. $13,237. I'm not going to put a line in because I'm not trading it, but it's a successful correction that occurred within this long-term time frame. Let's change this to let's do the 3-day chart, only because I want to now compare this with Bitcoin. So now let's bring in a Bitcoin chart, and I'm going to bring in the Bitstamp index. So here we have the phenomenal gain, and I'm going to change this even to the weekly chart. Let's go. That looks better for me. So every single time during this run higher, the market's always corrected within this 18 average. It has a little bit of sideways action. Sometimes it went below the 18, but it generally just had beautiful moments upwards. And this is a 23.6% correction. And an equivalency to the Nasdaq would actually be down to 43, but we're always talking here about pattern recognition. Is this a very similar spot again, or is this, shouldn't have used very. Is this a similar spot with this chart and Bitcoin where you have that big move that goes below the 18 average of lows like this for the first time on the more long-term charts that get a lot of people scared? Then you got the linear fans or the log haters who see this. Now, when I say log haters, I'm kidding around. It just seems as if people don't know about this or they don't understand it. Yet this should be in every major market textbook when you're dealing with codes of major volatility. But anyway, it's again a similar thing. Is this the washout effect? Question mark, yada yada yada. So anyway, just wanted to bring up that comparison. And obviously with MIG moves, I love the logarithmic chart because, let me just now put this on a more longer term. Because when I look at it from this perspective, I can actually see all the ABC movements really well. I can see that there was a big rally from around Christmas of 2012 to this high in the spring of 2013. I can figure out the gain. Oh, 13 up to about 255. That looks to me about 17, 18 times. Had a small correction here. Higher high here. This support came back to where it came from. I can do all that type of stuff. But if I go linear, how How can I do that? So I don't understand. But you know what? It's up to the people within the analysis they want to do, how they want to do it. They're their own boss, basically. When I got into trading for the first time, it really didn't take me long to figure it out, because when I was looking at these charts, I'm thinking, I mean, this just doesn't look right. And I could figure out, okay, so going from 151 to 938 in just this little move is like 6x. Yet 6 divided by 20,000 would be all the way down to here. So I'm supposed to believe that this large amount of the screen allocated is the same as this microscopic amount? No way, no how. Alrighty then. Thank you for tuning in and have yourself a great day. Bye-bye.